What's up, traders? Welcome to this week's episode of the Weekly Watchlist, where I do a technical analysis and give you my thoughts on the tickers up here on the left. So as always, we have our broad market, our core list of companies, some of which the earnings cycles are coming up, and we have about 12 trade ideas to share with you towards the end of today's video, so definitely stay tuned for that. Some of these trade ideas here came from Discord members, so if you want to join the Discord chat with myself and other fantastic traders in real time, definitely check out the links down below in the description. I believe it's the last one down there, and sign up for the Swing Trade newsletter while you're at it. Let's just jump right in. Kicking things off with our SPY weekly chart, looking at candlestick structure and location as we always do. This week we have the exact opposite of what we had last week. And whenever we have candles of the same size body stacking up one after another, you just go with the one that's in front. Obviously, this engulfing candle here negates almost all, or if not, some more than the bearish action that happened in the prior week. So that's a completely bullish sign. Obviously, in terms of location, we did set a new all-time high, so that is bullish as well. And as we know, we've been using this red candlestick here as sort of a measuring stick and remembering our range of thirds. There we go. We tested the middle third, right? We certainly closed down below last week, but obviously strong buying reaction was found there, and we have now closed higher. So from a weekly perspective, all things look good here. If we remember our trend line, sort of zoom out a little bit here and go from the bottom here, doing the swing out method, boom, that's where we get our first touch. That's coming in from right here. You'll notice that we sort of supported right where we needed to maintain this overall weekly uptrend, which we were kind of hammering home in last week's video. I know intraday we got a little bit bearish, but remember, zoom out, give yourself some perspective, and from a weekly perspective, at least, things are still intact. Let's drill down to the daily. So coming into our daily chart, we have certainly adjusted some of our levels. So if you've been following along for the past few weeks, things have changed here in terms of where our levels are outlined. And that was because on this aggressive sell and then rebound, nearly 100% more, and more rather, that was very liquidation break-like, right? We had very aggressive and emotional selling, and it was taken back 100%. So we know that all short-term sellers should technically be out of this marketplace, but there was a lot of short covering, right, which causes this rally here, and generally that leaves some poor structure in its wake. So because of that, we have updated some of these levels, and you might want to at least pay attention to what we have to say here. So that being said, we did close strong as noted on the weekly time frame. High volume there on Friday. It looks like a decent close, but something to consider is that we have a gap just below us, right, on very compressed days in terms of range. We certainly had these two very emotional breakout days, which I would attribute mostly to short covering, right, as we moved into this gap above. But after that, right, very tight compressed range, not exactly what you would expect as we're breaking into blue sky territory. So please note the gap below us from 424.64 down to about 424 the whole dollar. After that, you'll notice that this level here goes straight across 2 days and even intraday here. And that's going to be a very important level because here on Wednesday, it was the exact low of day. And in between, right, let me just drop this down to a 15-minute chart and zoom in. What you'll notice, if we just get that to zoom a bit here, so here is the low in question, right here, from, what did we say? That was Wednesday. And the overnight session low is the exact same level as well. And it's also the prior breakout level from the day before that. So if that level goes, it could open the door to some more selling. So definitely keep that one on your radar. The next level I want to point out here, again, is going to be coming straight through an intraday zone. And that's going to be from on Monday, right? As we sort of saw that panic cover of all the shorts to the upside, we finally consolidated at this level. And if you're a sort of aficionado of market profile, we pointed this out on Wednesday as well, that's where your single prints begin underneath that area. So keep that in mind. That's at 419.75. I wanted to show you the intraday charts just so you could get a better handle on where those levels are coming from. We'll go back to our sort of daily here and zoom in a bit. So the levels that we just discussed, obviously the gap here is that mechanical low from the overnight session, right? And then here is where our single prints start. Underneath that area, I would expect a rather rapid move to take back many of those single prints to the low of Monday where that rally started from at 416. We'll also remember that 416 was a very pivotal low here as well as a breakout level, so I wouldn't really expect that level to break. And again, we're thinking in terms of scenarios here. I'm not calling for a complete rollover of this move. As a matter of fact, whenever you see something like this, a 100% retracement, it's extremely rare that you ever come back and revisit this low. We generally, quote unquote, call that a safe low. Okay, so I'm not calling it for 416. I just want you to be aware of the structural deficiencies that are underneath us in the S&Ps. Obviously, if we take out Friday's high, it's just keep paying attention to whole and half dollars, any intraday levels that form as we move into blue sky territory. So moving over to our Qs now, you can see that our structure is much better. We did put in a tight area of consolidation that was discussed in the prior week. We've broken out of that, and now we're starting to consolidate again, finding acceptance and value higher, as opposed to selling off aggressively there on Friday back down into this range. I will say, if this 2-day low breaks here at 349, we'll call it the whole dollar, it's not the end of the world, right? Look at the run that we've been on ever since these lows in here. A little bit more of a pullback, right? Something like this to retest the breakout point at 344.68, 345 if you want to round up. That would be completely fine and healthy in my opinion. If we draw in a support trend line here, you'll notice it's quite steep, but again, if we do get that pullback early on in the week, that could coincide there for a super support buy at that level, looking for the intraday bounce. Anything underneath, we want to see the prior highs, breakout highs, right, at 342.36 hold up, and after that we have the 50 SMA. That to me would only be in play, right, if we saw that aggressive collapse in the S&P, but as we've noted, that quote-unquote safe low, right, I don't really think that'll be in play, so I don't necessarily think that the Qs and the NASDAQ 100 will have the 50 SMA in play. Looks fairly bullish. Obviously, if we take out those 2-day highs in there, really Thursday's high, the all-time high at 351.46, it's just continuing to watch blue sky levels, whole and half dollars, intraday levels that do form. And then last but not least, we have IWM Russell 2000 and our small caps. The first thing I want to do is clean this chart up a bit. We can definitely get rid of this resistance trend line. It's been violated a number of times now, and I would start to argue that we're just forming a rectangle of consolidation as opposed to that aggressive sort of compression of range with the triangle in place. So that being said, we're at the top of the balance range right now. We're just bubbling underneath that all-time high. As the rest of the market continues to move into all-time highs, I would remain slightly bullish here on IWM, especially that strong reaction we got from this area of chop. As we know, breaking out of this, or rather bouncing out of it strong to the upside, that gave me a little bit of a boost of confidence, just in the sense that, it looks like buyers want to start exploring prices higher, and the sellers aren't really showing up anymore to try to keep, the price contained in this overall range. So as we said, if we can sort of take out this area here at 233.50, it certainly looks like all-time highs could be in play, blue sky levels, whole and half dollars, intraday levels that do form, obviously 240 and then 250. It's quite a ways away, but after consolidating in such a quote-unquote tight range, if you will, for such a long time, the breakout out of this could be substantial. So 250 would be the next major psychological level to play against. I'm not saying it has to happen this week, next week, or even the week after, but it's something to keep in mind as an overhead target. To the downside, if we continue to consolidate in this range, I would really want to see it hold 230 this time around. Remember, on the initial break of that resistance trend line, we were sort of consolidating up here for a couple days. That hammer sort of held it there, but now that we gave it up once, now that we're back above, I would certainly want to see that area there hold. Last ditch effort, I would really place a lot of emphasis into the 50 SMA this time, not so much the 227. It might coincide as a super support, but the 50 SMA has been providing now, if you want to call that sort of an area of bounce right in this general area, higher lows, and if we continue to see higher lows, that would bode well for the IWM. So if you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel so you know every single time a new video comes out. Jumping right into Apple, you can clearly see that we did get the break of the resistance trend line, but it's not an ideal situation in my opinion. As we discussed in the prior week's video, what we wanted to see was a little bit of a rejection first, forming a higher low, and then the break. That would have led, in my opinion, to a more explosive breakout. Obviously, here we did get the break, right? And then we just consolidated for 3 days. I think this would have been a different picture if, again, we got something that looked more like that, after giving the buyers a chance to catch their breath, if you will, for that higher low pullback. But playing the chart as it lies would should start to get aggressive to the bull side if we can take out that 135 here, obviously pressure cooker top from in the past, in which case, as you know, we have 137 and 138 whole dollars above as targets. Our 137 is coming from that high there, of course. After that, again, just continue to walk them up. There's not a whole lot of resistance in this area. If we look left over here, that's very emotional selling, so the market structure there isn't going to be too strong. I would look at 140 the whole dollar, and then really just watch out for that all-time high after that. Again, does it have to happen this week? No, not necessarily, especially after the impressive run that Apple's been on, really from the bottom end of the symmetrical triangle here. What you don't want to see Apple do now is fail underneath this 131 area of support. If we go back and retest it, that's fine. That's sort of a back test of the breakout from the resistance trend line. But when we get there, you would want to see the buyers step up and do something like this to maintain forward and upward progress. Any failure back down underneath there, watch out for the 50 SMA and overall chop as we head back into this area where you can see buyers and sellers were in disagreement for quite some time. So Netflix, I will fully admit that I got this one wrong, but that's fine. You don't need to nail every single setup. And even if something looks bearish, right, with these lower areas of value being established, right? It doesn't mean that, when it breaks out, obviously we're looking at hindsight, right? It would have been much more difficult, in my opinion, to go long on Netflix here. But, regardless of what happened, how do we move forward with this? Well, we certainly moved into this overall earnings gap down, which should lead to some explosive moves, right? In theory, there shouldn't be a whole lot of liquidity in this area or now in the gap underneath us. So if we take out Friday's low, just look for the gap to fill underneath from 525 down to about 521 the whole dollar. If we move above Friday's high, just look to finish filling the gap to the upside with a bump in the road here at our 540 just about. But the gap ultimately fills up to about 546.38. After that, all-time highs could be in play, but do keep in mind the sort of extension here, the explosive move out of the range. We could be in store for a little bit of consolidation and digestion of this move before making another substantial one. Okay, so keep that in mind. Don't get overly long or overly short here. The area of support that I would want to see hold now, if Netflix is truly going to hold this breakout, is definitely the top end of this range here at about that 514 whole dollar. So absolutely beautiful moves here in Tesla. Last week, we talked about this ascending triangle, and we finally got the breakout Wednesday and into Thursday as well. Sort of consolidating just like Netflix. Again, after a large expansion of range, we could be in store for a little bit of sideways action here. Don't be surprised if you don't see massive follow through. It's just not how the market works, right? We're likely not coming up and tagging the all-time high in this upcoming week. Now, could it happen? Sure. But, some digestion of this move would be required, in my opinion. We have a two-day balance in play, so just like Netflix, look out for underneath the lows of the two-day balance to fill the gap underneath. So under 667.53 fills down to about 657, so about a $10 gap there available in Tesla if we take out those lows. After that, again, just like on Netflix, you would want to see this 630 area hold if we truly are making forward and upward progress in Tesla. I also want to remind you of this overall resistance trend line, which has now broken, but there is the gap underneath. So just monitor this. Obviously, as we just sort of dribble lower, maybe potentially fill that gap, that's still going to be bullish. The thing you don't want to see happen is, of course, a aggressive decline in price to fail back down beneath that resistance trend line. In which case, if it does, I would be keeping an eye on, again, this sort of support trend line to see if we can still maintain higher lows. Upside targets here over the two-day balance, obviously we have that 709.50 mark, but after that, I would look out for some of these highs in here to come into play around 750. So Alibaba, I'm leaving it zoomed out on purpose because clearly we did break our resistance trend line, sort of just like Tesla. It certainly feels bullish when you're caught up in the minutia of these movements in here, but don't ignore the overall downtrend that we've been in, okay? So it's okay to start thinking to the long side, but just, be sort of skeptical until we truly prove we're out of this overall downtrend. Obviously, just like everything we've talked about so far, this is a very aggressive move to the upside. It could use some consolidation to cool off. One thing I certainly like is the build in volume that happened on Friday, big breakout day, and the close up here at the highs, especially inside of this area of sort of chop, if you will. Closing here as opposed to just rejecting this overhead supply and dipping back down under 225 strikes me as rather bullish. So if we can consolidate in this sort of range up here, that would bode well. Again, if we form a daily bull flag, obviously take the break higher. Your target would be up here, close to 238. To the downside, obviously we just discussed 225 needs to hold, but if it doesn't, we have the gap underneath, which should provide a target from 221.18, filling down to about 219.58. 50 SMA is sort of wrapped up in there as well, so that should provide a super support. So Facebook, in my opinion, still looks phenomenal. I mean, look at this area of consolidation and acceptance, broke out of it to the upside, just like we discussed in the Qs. Basically, if we see any further pullbacks, it would be fine to hold this area of prior resistance as new support at 337.50. After that, taking out the highs would put blue sky territories and the 350 psychological number in play. Anything underneath our 337, watch out for the support trend line. Again, that should be a first touch buy because we have set a new higher high. If it fails and this critical area of support from the balance fails at around 330, then I would start to question Facebook for more of a sideways trend, not an overall breakdown here and new bear market, but just sideways trend as we fail to create and continue to create new higher highs. So again, be skeptical. 50 SMA should be your next major area to keep an eye on. So NVIDIA, my goodness, this thing just will not stop ahead of its split. Obviously, the split's coming later in the month of July, but as it currently sits, I mean, just closing and consolidating, spending time up here at the all-time highs on the break of 774, really. You're just looking for more blue sky territories, whole and half dollars, intraday levels that form. On this one, I would just say whole dollars, 250 marks, and $5 marks. So we're talking about a stock that's trading just below 800 now, coming from, 500. So extremely impressive move out of NVIDIA. Again, if you haven't been, long for a while now, I would say that this isn't the ideal spot to start building a new long position, especially for a longer term hold. You don't generally want to buy the tops here, especially after a really aggressive move higher. So just keep that in mind. Sure, you can day trade and scalp it, but be skeptical of building, again, that longer term position up here. We do have a support trend line that would look like this. Again, very aggressive, very steep. I wouldn't be surprised to see it break sideways through time or, consolidate and do something like this in this overall range. That wouldn't be out of the picture here for NVIDIA. That area of support that we just kind of mapped out roughly is around 721. After that, we have one just beneath it at 706. And the last line in the sand really that I would want to pay attention to is here around 688.37, the low end of this first area of consolidation from the breakout of that prior all-time high. Microsoft kind of catching up a little bit here and looking just like the Qs and even Facebook, right? We can draw in some support trend lines. This one is obviously not really in play. This one certainly is. And again, extremely steep here. Wouldn't be surprised to see it break it sideways through time. But what you don't want to see happen is an aggressive violation of that support trend line like this. Again, just like the Qs and Facebook as discussed, we could easily pull back and retest 263.11, the breakout area from in here, and be completely fine. Even underneath that, I would want to see it hold this 257.04 if we were to get there. Obviously, that's lows from in here and consolidation lows from in here. If we really travel lower, obviously 50 SMA, just like many other things, will be in play, and that would put Microsoft into more of a period of cooling off, right? Sideways activity as opposed to an outright bearish market. And last but not least, the beast, we have Amazon. And this one's actually interesting, especially given the backdrop of what's been going on in Qs, even Microsoft and Facebook, as we just discussed. We had this 3-day pressure cooker top building into the end of the week there at 35.24. It looked like it wanted to go and potentially do something like this, all-time highs, but it just wasn't the case, right? Obviously, the week close there on Thursday meant that Friday violated some pretty important support, right? What I will say is if we break out our Fibonacci's and do something like from the low of the move to the high of the move, what you'll notice is we're pretty much right at the 38.2, which is the first area you want to see hold on any aggressive pullbacks through price. So it's kind of make or break, in my opinion, here for Amazon. Obviously, closing underneath this sort of 34.30 area, which was prior resistance, we wanted to see that hold up as support. Wasn't the case, right? The bull flag in the ideal world would have looked something like this. And not violated that area, but we're playing the chart as it lies. We're at the 38.2. Maybe if the rest of the market opens up bullish, we pop back up into that consolidation range. But if not, 50 SMA and this breakout point from in here is certainly in play at 33.0950. I would just watch out for that. As it sits, again, this isn't one that I would want to be aggressively long on into the earlier parts of the week. I would prefer something like Microsoft, Facebook, even Alibaba, right? Looks better than this with the aggressive red candles closing on Friday. Quick reminder to hit the thumbs up button and subscribe to the channel if you haven't already. And let's kick off these trade ideas here with Caesars Entertainment, right? What we're looking at in this chart is a support trendline potential hold, hammer-ish candle / lower wick formed on Friday, especially with the 50 SMA tangled up there as support as well. If we just zoom in a bit and let's put some levels on this chart for breakouts, obviously you would want to see it over 106.25 for that move higher, in which case you're targeting basically the all-time highs in here. The support that I would would want to see hold, if we just put a support trend line on the chart officially, go from this low, and we will just drag it up like this about. Obviously, your stop would be on the other side of that support trend line. So bullish trade idea in Caesar. Uber is up next. This one is just starting to break a pressure cooker top on the daily. This one's been on our sort of watch for a while now, and it's finally coming back into play. So I want to make you aware of that. We're taking out the 50 SMA. We closed right on it / above that pressure cooker top at 51.63. If we look left, obviously this is very emotional selling. There's not a whole lot of structure there that would provide obvious resistance. So the first place I would look for as a target would kind of be up here around 54.67. So about a $3-ish move available in Uber if we can really get going over those this area of resistance, right? Next up is CRM. This one came from a Discord member. And what I like about this setup is just the consolidation and acceptance up here at the highs. If we can get something going and at least hold on to the 241, I know this chart is actually quite busy. Let's clean it up. If we can get something going over this area here, over 246.44, and at least hold this 241 area that we just talked about, I would say obvious target is just overhead at 251.35, prior area of resistance. And after that, again, looking left, not a whole lot of market structure, especially in that aggressive red candle there. I'm not saying it has to happen in 1 week, but a potential future target in CRM would be up there at 265.77. Next up, we have MRNA. Very simple setup here. Obviously, we talked about this breakout area from in the past, but on the pullback, we didn't even go to it and retest this breakout point. So that strikes me as bullish that the sellers didn't at least want to revisit that area. And as we've rebounded, we've started to form a new pressure cooker top here. Just to put a value to it, I would want to see a strong breakout over about 225 to just target blue sky levels up above. 250 would make a nice psychological target here, and you would probably stop out under this area of consolidation. I wouldn't really be interested if we just go sideways and violate 211.57. Next up, we have SBUX, right? And this one is breaking a resistance trend line. If we zoom in a bit here, grab our trend line tool, what you'll notice if we go from the highs, draw in something like this. First touch obviously would have been right about here. This is kind of, in the same vein of lower highs at least. We get another touch here. Inverted hammer on Thursday struck me as, looking like lower, right? But we actually closed strong on Friday above that resistance trend line and at the 50 SMA. If we can get something going here, obviously the horizontal resistances from these lower highs would be in play. So the breakout is over that 113.25. First target here on the next lower high at about 114.60. After that, we can walk them up here at 116 the whole dollar, so on and so forth. Wouldn't really be interested in the trade if we start trading underneath 110, or let's just round it to 111. Next up, we have ABBV. This is actually the exact opposite of what we just discussed on SBUX. It's a break of a support trend line, right? So if we draw a support trend line in from here, go like this. Our first touch is certainly this one right here. We respect it again there. We have formed lower highs, right? So high, lower high, and now we've broken that support trend line and 50 SMA with a doji. Any move underneath the low of Friday, and I would just look for the short, probably play it safe to just that prior swing low. Don't expect too much out of this. Let's see what that is. So under 212.13 to about 210.84, a rough, $1.50-ish move, if you will, based on some rough math there. Wouldn't be interested if there was any sort of gap up and recapture of that 50 SMA here in ABBV. Next up, we have MO, and MO is simply a pressure cooker top, very similar to what we talked about in Uber, actually. Look at this area of highs, right? If we just do a horizontal level at 47.50, started to close above it on Friday. Again, looking left, very emotional selling here, even a gap above to use as a target. So look for the bottom of the gap at 48.93, call it 49. 50 SMA will be a little bit of a sort of hang up before we get there, and then the gap will fill up at 49.33. So not a huge y-axis here, not a huge range, but certainly a valid setup in MO. Next up, we have BIDU. Huge day on Friday, just based on a percentage there, looking at the market minder. If we zoom in, what I like about this, and even just some of the Chinese stocks, if you will, like JD is similar. BABA obviously broke its downtrend. Obviously, BIDU is no different, right? Here is your downtrend, something like that, gapped up and over. Even if you look at it as a double bottom, so touch 1, touch 2, we could get going over the neckline, which just so happens to coincide with a prior area of support as well. So anything over about that 204.52, call it 205 the whole dollar. And I think BIDU and some of these Chinese tech stocks could wake up here The obvious target would be the top end of this overall range, which would be up here around 227.51. Again, doesn't have to happen in a day. It could just work its way up there over the course of a week or two, and that would be fine. Next up, we have MA for MasterCard. If you can guess what setup this is, you'd be a very, you'd know what I like, right? This is a clear pressure cooker top, area of consolidation, back-to-back candles printing with same size bodies as we discussed with the SPY Weekly, right? You always go with the most recent candle. So the bullish engulfer here, if we can get some activity, some traction here over 379.22, just look left, not a whole lot of market structure here. I would argue that the obvious target are these prior highs up around 390. It wouldn't be interested in the trade if we start moving underneath that 373.50 mark. Next up, we have Crowd. I know I have a lot of trade ideas, but pick the ones that you like, pick the ones that fit best with your budget. Crowd is going to be a simple daily bull flag. Obviously, the consolidation highs are up here at 257, and the lows of the consolidation are here close to 250, the whole dollar. If we can, get the breakout, obviously blue sky levels there, wouldn't be interested in the trade if we were to take out the lows of the flag at 250. Do keep in mind the distance that this one has already traveled. We've talked about this with some of our other companies. Just be skeptical, right? Be ready to book profits aggressively in case there is any sort of pullback that could take back whatever move out of the flag and consolidation that we do get. Next up, and getting towards the home stretch here, we have BYND, and again, simple area of consolidation, nice tight range here. I like the flat lows at 143.18, and I also like the fact that we could do something like this, horizontal at 154 for the conservative breakout, or if you're a more aggressive trader, maybe you take the break of the resistance trend line, which, based on where we're at, it would kind of be the middle of the range here around 149.34. Your first target where you would take some off is up here at 154, and after that, again, as my motto has sort of been here, look left, kind of emotional selling on this downturn. I would say that the next logical target would be the bottom end from support of this range. If we grab the other tool to put a value to it, it would be right here around 165.97. So call it 166, the whole dollar. Wouldn't be interested in the trade if we trade underneath 143.18. And last, but certainly not least, we have Hershey's. And my goodness, what an explosive move that we got off of the 50 SMA here. Perfect pressure cooker top. I mean, look at how many touches we have to about 175.13. Let's just count them for the sake of the video. So we have 1, 2, 3, 4, 5, 6, 7, 8, and now 9 touches all to the same area. I would certainly expect a breakout happening on an extremely impressive volume, right? Thursday and Friday, strong bounce off of that 50 SMA. So looking for a breakout momentum continuation here in Hershey's. That's going to wrap up today's video. Hopefully you watched all the way through and got all of those trade ideas. If you enjoyed the video, learned anything new, definitely let me know down below in the comments section or by simply leaving the video a thumbs up. And with that being said, I wish you a green trading week.